Now, everyone, it's Tim Reazor with Revere Asset Management. Just before 3 o'clock here on a Wednesday night. So very quickly, stock nerds, market lovers. Before you and I begin, look, what I want to do tonight, I don't want to bury the lead. I want to talk about 2019 levels and some of the big stocks. I want to talk about giving up the ghost, so we'll call it giving up the ghost, GUG. And then we are going to watch together live what Tesla does and talk about maybe a roadmap for the rest of the week once I see what those numbers are. And so really quickly, let me do this with you before we start. A couple admin things. Look, the podcast, the link hasn't been working on iTunes. We are actively trying to get it fixed. As a matter of fact, I have a meeting this evening just about that very issue, trying to get it fixed. But if you have not been catching the podcast, because you normally get them through Google Play or the Apple iTunes store, I know it might sound like hyperbole, but I'm telling you, some of these podcasts have been, like the last 4, have been really good. This one right here, you wouldn't get it from the title, the Dow, Danny. You get to listen to the podcast. It tells a story, but we talk about rates and the fallacy of bonds, and you trying to get bonds that pay high rates, and why that might not always be the most advantageous thing for you. It's a great show. I highly encourage you to just go to the new website, revereasset.com, same website address. You go to tomorrow's insights, and then what you want to do is you can actually just click the tab that says podcast, and then you can listen to this show just like you would a podcast, easy for me to say. Just click full screen, and when you click full screen, you can lock your phone and then hit play on the lock screen. Those of you with iPhones and Androids probably know exactly what I'm talking about, and it's just like a podcast. It plays while your phone is in the locked screen position or off, and you don't have to just have the screen on, burning down your battery or staring at it. So hopefully that makes it easy. And then look, if you want to know the strategies to which we employ here in the shop, or you can just just scroll down to the About Us, go to About Strategy, Core Portfolios, Hybrid Portfolios, and then scroll down here, and you can talk to any one of us. And then there's America's Fiduciary right there, Danny Stewart. And if you want to talk to Don and Hunter, the two fellows that make all the decisions in the portfolios, what goes in the watch list, what comes off the watch list, what goes in the portfolio, what comes off the portfolio. Look, what makes us different than everybody else in the free world is that we're available to you. Whether you're a client or not, you watch a video and you have questions, you can email any one of us, or if you're on your connected device, you can just hit this button and you're actually going to get connected. You hit that button, you're actually going to get connected to Danny. And someone might say, why is Danny answering his own phone? That is actually a policy we have here in the shop, that Danny answers. We answer to the people. So that's why we create the videos every night. It's why we do a number of things we do, why we're so client and consumer centric and focused. So Danny answers the phone because he loves to talk to you. That is not empty words. He truly does want your phone calls. And then if you want to contact us, and you don't want to do it by email, you just want to send it in this way, hit the contact tab. There you go. You send a message right there. So stock nerds and market lovers. Oh, there's another way too. You can, if you want to, some of you don't like email, you think you're going to get spammed. I swear we're never going to spam you. You can just email. You can just find me on Twitter at TJ Reazor. You can find all of us on Twitter, by the way. My DMs are open. I don't know about the other fellas, but my direct messages are open. You just message me like we're texting buddies. I used to give out my phone number, but it became a little bit too much. So I left my DMs open for all the stock nerds and market lovers out there. And that's how I got one right there. You can get a hold of me. So now with that, these videos are for what? Your edification purposes only. They're never ever to be misconstrued as advice. And if I see advice, all you have to do is, in fact, give me a call. So it's 2:59 right now. And so what I want to do is, let me show you this tweet, and it's even more now. So I want to talk about Netflix here. Netflix valuation has declined by $200 billion in the past 5 months. I mean, just fathom that for a minute. The market, Netflix is worth $200 billion less in the last 5 months. That's nuts, right? And then here's Netflix, and everyone knows what happened to Netflix. They down 35%. But here, all the way over here, okay, so the market's closed, so we'll keep an eye out for Tesla here. So look at this. You're down here, you closed at 226.19. Do you realize you have to go all the way back here to get 226? Somewhere in 2018, You're in the zone of 2018, 2019. Okay. So this is earnings season, so it'll be really interesting to see how this progresses. Now with Tesla, Tesla's going to throw off a lot of this. Whether if Tesla beats well, it doesn't matter if they beat, it's how the market takes the report. If Tesla blows the report out of the water in a good way and price rises, that's going to lift it. It's the 9th or 10th rated stock in the S&P 500, about 4 or 5 in the NASDAQ 100. So it's going to lift a bunch of boats tomorrow or tonight and then tomorrow. Well, we'll take a look at that here in a moment. But what if your favorite stocks came down to these levels, right? AMZN, like just giving up the ghost. You're like, there's no way Amazon would ever do that to me, Tim. You clearly don't get how markets work. Look, I'm not saying Amazon's coming all the way down here here's 20, to give you an idea of where I'm looking at. There's 2020, but to think that it couldn't give up. I mean, this is a big, if it eclipses, maybe it has to come back down here again and retest, we'll just call this level 2,700. But what happens if it breaks 2,700? Where's your next area of support? Yeah, it's in here down at 25. We'll just call this 2,500-ville. To think Netflix couldn't lose $500 or $600, Amazon couldn't lose another $500 or $600 or more off of it, off its price, you're nuts. These things are going to shed. Netflix shed water like it was off a duck's back. Like, it's nuts. I mean, that is market cap destruction in one day, but it's been going on for 5 months. And then you look at Amazon here and you're like, well, is that going to happen to Amazon? I don't know. They report next week. And then what about Google, right? And so could Google do this? You know, if these things report and they start taking out those February lows, like right here, and Google, obviously, they just print money, right? Because we're all searching on Google. YouTube is behind Google itself. YouTube is the #2 search tool, and I love YouTube. But to think it can't come down, if it takes out 2,500, I mean, this is a wide gulf. There's a lot of destruction. And so that led me to thinking, I was doing this earlier this morning, like, what if these all just come down? And we could do it with Apple, do it with Microsoft, do it with all the high flyers, right? And, you know, like, what if the market just decided to give the ghost? And it feels like right now, tonight, it hinges on what does Tesla do? And Tesla supposedly is going to report here momentarily. So what I'll do, I've got more content here for you before we figure out what Tesla's going to do. But what I'm going to do is I'm going to take it to style, and then I'm going to turn on show extended price. And then what I'll do is you got to drop it down. When we come back and check on it, we'll drop it down to like a 5-minute chart, okay? And what you'll notice if you're newer to Thinkorswim, the darker areas are pre-market and aftermarket. And the lighter shades on my chart are the cash session time frame. So right now it looks like there's nothing out here, and maybe it doesn't come out till 3:30. I thought the conference call was at 3:30, so hopefully momentarily we see some kind of action on Netflix. But let me get this back to a daily chart and I want to show you the push and pull that's happening right here, because it feels like we're on the precipice, right? On the precipice, just rolling over. I'm talking about like this one. Can it really be this one report is going to make or break the market? And I didn't think, I mean, no one had money on Netflix going down 35% today, did they? Or maybe somebody knew. But if you look at S&Ps here, look at ES. And so if I showed you S&Ps, like, Tim, S&Ps are flat today, man. This is a good report, a good day today for old S&Ps. Oh, look, S&Ps are starting to move lower. So I think Tesla's out. So let's take a look at Tesla here and see if it actually is out. 280, hard to tell. So 286, 287, up 10 points. Okay, now it's out. So let's look at it. Let's watch it together here. So you're up 20 points. Like, how do you know that? Well, it was moving the S&Ps. And so here we're at 1,000. And so here we go. So here's Tesla up. And so that should be enough, right? Like I mean, we're literally just got this report. So we'll see what happens with Tesla overnight. I'll tell you what the expected move here was in a second. So let me just quickly look as we watch Tesla. So I'm looking off screen at a different screen, and the expected move in Tesla into the end of the week is $90. Okay, so plus or minus $90 is Tesla. Okay, so you can see goes out at, we're going to round up, right? We'll just round down 277. So wow, it's up 12 points or 13. It's moving really quickly here. Okay, it's coming back down. So now it's going lower. So listen, the market makers are the ones who make money here. Plus or 90 points, all the options bought or sold in here. They're just going to vacillate because the premium was so high. But this isn't certainly running away to the upside or the downside, whereas Netflix, I put Netflix up here. Netflix last night had a plus or minus of what? 38 through the end of the week, or we'll just round it up, call it 40. So Netflix going into the print last night had a plus minus of 38 to 40, okay? And of course it went down 122. That is a huge move. But right now, this move right now in Tesla, up, 13 points, vacillating. It's well within the window of expectation. And so it's really hard to see what it does for that. So we'll go back to S&P chart. I'll go back to a daily. And so you can see the S&Ps are pretty much where we left them at +6, +5. And this chart is a good looking chart, right? Like, Tim, what's wrong with this chart? So let me put it on a ATR chart. And when you look here, like this is the mean, or the 21 exponential moving average, +1, +2, +3. You're above the mean, right? You come down to -1 ATR, you hold. All that's really super bullish action. So why would that be? Why could we be on the precipice of falling apart, but yet this is a good looking chart? It's all the things, the metals, the minings, the Procter and Gambles, all the stocks I'm about to show you on a list that are encapsulated within the S&P 500. And so I bring you back the S&P 500, like, Tim, that was a good looking chart on your ATRs, but what's wrong with this picture here? This doesn't look so hot. Well, you're capped here by the 200 day. You need to get through this level and potentially get up to 45.38, and you're at 44.65. So maybe you do that, but what are the algorithms run to? All the common denominators. So you really need to come up here, test this, and then break through. But that's going to serve as a level of resistance. And so far, who knows what they're going to say on the conference call? Tesla isn't blowing away the doors the way Netflix did to the QQQ last night after hours. It sunk the Qs. And what kind of day did the Qs have, right? What was the QQQ like today? Yeah, down 1.5%. And so right now, Tesla is not having the Netflix effect on markets so far. That could change. That could all change by morning. So it's really hard to call direction saying we're about to fall apart. Overall, it looks like sell in May and potentially go away is setting up here, but we'll see. And if Netflix can come up, Tesla can come up here and excite the NASDAQ to where? To the 21 where it failed. We'll see if it can do it. Now let me show you this chart. Everything's moving a little bit slowly. If Tesla can get the market to get this zone, to trigger in this zone, are they going to sell it up here? Or if they really get a run, could it get the NASDAQ get all the way back up here to where the 200? May not even get there. And so this market has a lot to prove, and just a few stocks here can do it. And you're like, well, what are they? Well, they're the big ones that Microsoft, Tesla, Amazon, Apple, of course. But let me show you what happened in semiconductor land today. So AMSL reported this morning, okay? ASML, pardon me. ASML reported semiconductor this morning. It is up. Let me just show you this chart here. pre-market going into the session, it reported earnings and it drove the NASDAQ higher. And it was up here at 655. And look at this, here's 1500. So look at this, reports this morning, it comes up and it's driving NASDAQ futures. It drove NASDAQ futures a little bit higher. And then it just bled off. Like it didn't keep that momentum surging, even though it was up 2%, almost 3% for the day. It didn't really hold that energy. And it didn't have a lot of pin action with, like, look at NVIDIA. NVIDIA closed down 3% today, but look at the pre-market this morning. NVIDIA, I mean, that's why the pre-market, that's why the futures were higher. AMSL has this great report. It takes NVIDIA up. This is 3:30 in the morning. That's today. So it takes NVIDIA up, and then the cash session occurs, and then look at this. This is bonkers, right? I mean, you were talking somewhere about 227-ish to close down at let's call it 215, and at a low of 211, 212, which ironically was the low in what? Netflix today. So it's hard to say where this market is going to end, because a leading sector here, really, to keep this market going in the two biggest indices, the S&P 500 and the NASDAQ, you're going to need these chippies to lead. You're going to need that big tech to lead, and you're not getting it right now. And so what is leading? Well, let me show you the Dow. Dow looks great here, you know, and then we'll get to my list here. I had more for you. Oh, we can do Japanese yen on Friday. We'll do, on the podcast, we'll cover Japanese yen. I have a relationship I want to show you with Japanese yen, and we'll talk about call on Friday, but I'll get to the list here. So look at the Dow. I mean, above the 200, challenging this recent high, but where are we at on the ATR chart? I mean, the Dow's your best indice right now. You're coming up to almost +2 ATR. So, and why is that a big deal? So here's the mean. If everything reverts back to the mean, there's -1, -2, -3. Here's +1, +2, and then +3. When's the last time you got to +2 ATR? Yeah, it's back at the beginning of January. It's been a long time since you've got up there. Does the market have the impetus, the stocks, there's 30 of them here in the Dow, to get up there? Oh, it's a tough road to hoe. But let me show you the stocks that are working, because it's not all bearish, but you know that. And so let me show you last week's list. And I covered this, and it came from, last week's list came from the list that's on your screen here. This is moving average stack, plus I've screened for at least a minimum of 2% yield. And I've offered you this list. I offered it to you last week on the video, during the podcast, and I'm offering it to you again today. Not that it's an end all to be all, but the screen is, you're more than welcome to it. Let me show you these stocks and show you what's working. Then we'll go through the list real quickly together. So from last week, I'm going to start with the loser from last week. AA. Let's see if it comes up. So AA, and I'll zoom in a little bit here. And so last week, today's the 20th. So last week was the 13th. And are you going to not? Well, you know, I know you can see it. So here's the 13th. 1, 2, 3, 4, 5, 6, 7. There's the 13th. Comes up, but it comes back down. That's kind of the laggard for the list that I gave you. I screened them, and I showed you this list. ADM. Oh, I'm so bummed that, yeah, I could do it over here. So here's ADM on 4/13, and then here you are today. So better than a sharp stick in the eye. How about AIG? Here's AIG on 4/13, and you can see the move higher in AIG. CAT, all of these. You can go back to last week's video. I can send you the link if you need it. Look at that. Yeah, 4/13, straight up with Caterpillar, COP. So you had to mix it. And look at what these stocks are, right? They're insurances, they're agricultures, they're metals, they're energy. COP, 4/13. Yeah, slightly higher, not a barn burner right there. EOG, oh, I really like this EOG chart. EOG 4/13, yeah, flat. I like that EOG chart. They're holding the 21. Get MET, it pays. MET 4/13, yep. That is a nice looking chart, Ed. And then that is it. So then I'm going to take you through this list here right quick. And I cannot believe that this chart is still frozen in purple, but that's the way it is. You can see here now, we can take a look at Tesla at 10:25. So now, yeah, now you're starting to get a little traction. Conference call starts in a half hour. Now remember, the bogey is plus or minus. So the market makers, people that control the options market, they have factored in the plus or minus $90 into the premium of the puts and of the calls. And so you are smack dab not exceeding those levels right now. Doesn't mean you won't, but you're not exceeding those levels right now. And really, you can see here that the Qs went out at 341.21, and they're just up maybe, less than a point. So definitely not so far that Netflix type effect. So let's do this. Let's look. We'll use this chart, and we'll come up here. So I already showed you ADM. Let's look at AFL, Aflac. And so you can see these charts, and I wish I could do it on here for you. Perhaps this will, I'm gonna try one more trick to fix this chart. That worked. Okay, so here's AFL, and we'll run through the list together. So you're more than welcome to have this AFL. We'll do this pretty quickly. AIG, Amgen. And so what's the commonality with all these charts? A couple of them are extended, right? But they don't look like the indices. I mean, these are the Peters that look like Bristol Myers, right? But notice where they live. They live in healthcare or pharmaceuticals. They live in energy. There's BP. They live in agriculture. There's ConAgra. That's Cardinal Health. We already talked about Caterpillar. This is chemical. This is energy. Look at Campbell Soup today. What did Campbell Soup go up today? I mean, up 2%. The big move, obviously, for Campbell's. CTRA. I mean, these charts. These are the charts you want to look at. And I've done that whole lesson on how I like to buy at the 21. Look at this chart of EOG. And to me, I talked about it extensively last week. You just go back and last week's video was on 413. And look at this, holding the 21. That's your point of least risk, in my opinion. And I explained why in that video. EPD, extended, just all these charts. And so you need a screen or an idea generator that gives you charts that look better than what? I mean, even the vaunted, let's pull up Tesla on the daily. Even the vaunted Tesla, which is now trading at 1016. This is a tough chart. The weekly looks great, but this is choppy. This chart doesn't look like whatever the next chart is. HIG doesn't look like HIG, doesn't look like Hewlett Packard, doesn't look like Hormel. And Hormel just keeps, we talked about Hormel extensively last week, just a staggering chart. So if you want that screen, and by no means is any of these stocks advice. If you want advice, need advice, seek advice, remember, all you have to do is contact us or call, it's 855-REAL-WEALTH, hit the phone button, or email Dan at revereasset.com. He'd be more than happy to talk your ear off about whatever it is that you want to ask about. But this list can give you a starting point, and then you need to implement your strategy of how you buy and what you buy and the reason why you do it. And if you're looking for ideas with a way that I do it that I think reduces my risk, all you have to do is click the Tomorrow's Insight tab, scroll down, and I will show you exactly where that video lies. Stocks can rally if these two things happen is one of them. And I believe this is where, yeah, this is the one. This is where markets typically bounce. Plus a free watch list to study. That's the video where I talk about the point of least risk for me to buy. Hopefully that helps you. So with that, stock nerds, I hope all this helps. I hope this was informative. Doing this live with you, like right after the market closes, watching Tesla come on, it really does help me because it allows me to just share what I'm really thinking when I'm constructing this video. And so if you have any questions on this, I'd love to hear from you, Tim at RevereAsset.com. With that, I will see you at the next update.